Where integrity leads, trust follows, and progress sustains. The Institute of Chartered Accountants of India, ICAI, is the largest and the premier accounting body in the world. It has stood as a pillar of financial integrity and contributed significantly to the economic growth of our nation for over 7 decades. Today, the role of chartered accountant has evolved far beyond traditional domains of accounting, auditing, and taxation. Through initiatives like specialized knowledge programs, national conferences, CFO summits, awards, and leadership development, ICAI is empowering members and creating a dynamic ecosystem that enables our members to excel, innovate, and contribute meaningfully to the nation's economic growth.
The role of chartered accountants today has evolved as a strategic advisors of the modern businesses. No longer merely the custodians of financial integrity, today's CAs serve as value creators and risk navigators who steer the organization through complexities of global markets and emerging technologies. Today's chartered accountants hold key leadership roles as CEOs, CFOs, and expert policy makers. They are the ones leading the charge when it comes to the good governance and financial well-being. By fostering this community of excellence, we directly contribute to the nation's economic resilience and industrial growth.
We are having 80% of the younger generation of the chartered accountants in industry and business. One can very well understand the expectation of the members, particularly the younger generation of the chartered accountants in industry and business, and with the help and support of all of you, the seniors, they are getting the best of the opportunities, and we are very well aware that no economy of the world can really go ahead, can really prosperous unless and until there is very, very active contribution of the members of the Institute of Chartered Accountants of India. Through using technology, through GCC, I think lakhs of chartered accountants are contributing for the other parts of the world. No balance sheet practically can be finalized with the very, very active contribution of the members of the Institute of Chartered Accountants of India.
The value creation, friends, begins with the strategic thinking. And it is not limited to only financial performance, but it also includes the customer's trust, employees' engagement, and innovation and environmental responsibility, the social impact, and how the creativity comes, innovations through the technology. This strategically driven organizations balances growth with the resilience, ambition with the responsibility, and performance with the purpose. So while strategy creates the direction, the corporate governance create discipline.
Global stage, better corporate governance has become a necessity, not because it eases business, but it also is a good financial decision because it reduces cost, it increases better corporate governance, better investor confidence in your company. So you are having better access to long-term capital. Then you are also having better resilience through stressful times. People will stick along longer to you if you really believe that corporate governance principles are something that you adhere to. So those are things that will stay on for long.
As you all know, last few months have been a roller coaster for us to see where things are moving geopolitically and how India is strategically placed. At times it appears that difficulties, if converted into an opportunities, that's where the growth comes. And I'm sure India is positioned at that stage. And it's time that we need to rethink what we traveled, what else has to be done. For this, we have with us our distinguished guest to share their experience, to add a value to today's session. So today's session is more an interactive on how a strategic planning is required. So with us today, we have such distinguished people whose experience and the value they created can make the session more vibrant. So I'll start my first question with our alma mater, Anuj Bhai. Today, as rightly said, the number of members are more in industry than in practice. That is all because of the growth that is taking place in India, and you can't divide chartered accountant from such growth. Earlier, we just gave as an accountants to the industry. Now, the chartered accountant are not only at CFO and also playing a CEO roles. So what exactly, from ICAI point of view, we are taking an initiative to create that leadership and strategic thinking among members?
We are very well aware that a chartered accountant is having the knowledge of each and everything which is required for being a business leader. And now, as the technology is there, AI is there. Now the role of the chartered accountant in industry is changing like anything, and not only in India but in other parts of the world also. The industry is banking upon on the members of the Institute of Chartered Accountants of India on the leadership role in a great way. Now we are trying to see that how my chartered accountants can have the learning beyond the routine, the learning of the accounting, taxation, and auditing. How they can take the leadership role as far as our committee for members in industry and business is concerned. We are trying our level best to see that how my chartered accountants, even the younger chartered accountants and the experienced chartered accountants also, can be handholded, can be inculcated the best of the leadership roles. We are trying our level best at the institute level. So Institute of Chartered Accountants of India, Committee for Members in Industry and Business, is putting its best to see that in the changing role, how we can handhold the members of the Institute of Chartered Accountants of India in the best possible manner.
Thank you, Anuj sir. Niranjan sir, first of all, really proud to have you today. In the initial days, when we heard sustainability, we thought that it's something, an imported word, and a lot of time to think about it. From sustainability, a peripheral CSR activity, it has moved towards a strategic reporting nowadays. So, and seeing your organizations, you are way ahead in that curve with a lot of investments in your green energy and data park. Whenever we know that sustainability is a key one in a long-term value creation, if at all you have to convince or place before your internal team, board, or investors, how difficult it is in convincing, because we all know any investment in sustainability, it may compress your short-term returns, but for sure, it add a lot of value in the future.
When we made Powai, which is 37 years ago, we have made 35% or 30% of our area were gardens, and we created forests. I've taken 75 acres of forest land in 3 portions. We have planted 30,000 trees in the last 10 years. So we are looking at green. But let's look at a profit angle. Yeah, chartered accountant बैठे हैं ना. तो हमने 15 साल पहले, 15 years ago, 20 years ago, no, 15 years ago, we put 2 buildings. One is Crystal House, and the second is BG House. They are commercial buildings, green buildings, and they are LEEDs rated, highest rated, platinum rated green buildings. तो हमने खर्चा निकाला. What is the cost? We saw the cost came to 12% higher cost at the time of construction. And this is, I'm talking about 17 years ago. So we said, chalo, theek hai, prestige ke liye, naam banega, ye hai, wo hai, nonsense and all that, which we normally talk. वो सिखाने के लिए कि भाई हमने है, और पहली बार हीरानंदानी ने कमर्शियल ग्रीन बिल्डिंग्स प्लैटिनम रेटेड सबसे ज़्यादा अच्छा बॉम्बे में हमने पहले किया. कोई नहीं किया, उसके बाद में भी 10 साल लगा दूसरों को करने के लिए, वो अलग बात है. We recovered the cost of that building in 4 years of energy cost alone. Besides, we used materials which were green. We sourced at that time green electricity and all were not available. But all the other factors we took into consideration, the materials that we were using, sources of materials. So we found it was profitable. So sustainability, ESG, everything is definitely, from a business perspective, chartered accountants, it is profitable. But you have to focus and make it profitable.
Pinky ma'am, being as a CFO in a largest financial institution, you might have seen a lot of market volatilities, a lot of regulatory changes sitting in front of us. You might have seen a lot of storms. At the same time, you have your own pressure on annual performances, at the same time, a long-term value creation. Do you really factor your long-term aspects and as the uncertainty search told in your annual planning? If so, how is it you're convincing the internal board as well as the external participants?
So our annual budgeting exercise does not mean that only we concentrate on a 1-year plan of the revenue or the cost or the profitability. It has many metrics like what will be the customers, the lifetime value it will be, what will be my risk appetite, what will be the investment in my digitals and the technology. What kind of the talent pool I require, if I have to grow. So all these kinds of the metrics are taken into factor, and not the 1-year annual budgeting is made. We usually make the budget for the 3 years, and then we see to it, because ultimately the capital is scarce, to be very frank. And so capital allocation is a very important, where, you spend the things in the right directions, which gives you the fruits and the benefits in the future. The second thing is that over the period of the years, the CFO's role has completely been changed. We are not the guardrails only of the balance sheets and all these things, or we control the cost. On the contrary, we take an active part, where the cost is spent, and, we look at it, that how it is being spent, whether it will be possible, that is going to give me a return in future, and that also a sustainable growth, And as a CFO, my role crucially plays in that how the conversation is being, done in a disciplined and in a more transparent way.
Thank you, ma'am. Pawan, great to see you and have you here. You are the best guy to really answer this. Today, while building a business model, how do you really define the investment in technology where the benefits are diffused not immediately in a long term compared to the business challenges who wants their yearly performance and growth? So how do you segregate that?
This is the real tension which is there, because the benefits or the return on investments are not linear. As you mentioned, they are diffuse. So traditional ROI methods on the investment in technology will not help us. So generally when we evaluate from 3 lenses. First is strategically, is it imminent? For me to implement a new technology, whether it will make me remain competent or not. If I don't implement the new technology and I may go out of competition, then it is imminent for me to implement that particular technology. Then the return on investments, margin, near-term margin will have no longer play in the decision making. Then it is a very simple decision making. Second question is in terms of the value. What are the value proposition the technology companies are creating by developing new platforms, whether those are generating faster response to our customers, additional revenue streams are getting created. What is it that is getting created? Of course, the benefits will not flow together. We will have to build up different scenario models to answer that particular question. So that is the another lens that we put in to evaluate in terms of whether to invest in new technology or not. Third is, then once a decision has been taken, then we also have to divide in terms of the execution phase and what are the benefits that will come up. So benefit, and then the technology has 2 phases to it, or 2 aspects to it. One is, as a finance team, we also implement a lot of technologies on our internal processes. And second is for our customers. So first 2 lenses were primarily for our customers. Third lens, which I am talking about, are for internal projects that we undertake. So a lot of automation, we all would be doing it in our companies in terms of a lot of AI. So nowadays, any automation that we do, we label it as AI. A lot of them could also be RPAs and all. We want to exaggerate things. So in our organization, we also try to review the process end to end. So that is the saving which will help us, or that will also lead to saving in our accounts payable function in terms of we may not need the headcount that we were required in the past. So manual exercise has been taken care of by this particular automation.
Thank you very much. So thank you all the participants. Such a wonderful session for taking out your time.
In this scenario, the way in which, a lot of ambiguity is there, the best governance practices that actually truly trustworthy enterprise organizations, follow. And how can actually these organizations move from treating ethics, is a much, and there are no negotiation for the regulatory framework compliances. So how do you feel and actually define this corporate governance?
I think, even as an individual, forget about corporate governance. First is important word is governance. Even as a citizen of this particular country, or even as a layman, not related to us, something, we are governance, and our, behavior has to be the best. And when it comes to the corporates, naturally, there is a lot of expectations, because these corporations are not only the manufacturing companies or service companies, but they are actually using the resources of the country. And therefore, what is expected from these companies are, that there should be a sound, fundamental, compliance to the rules, regulation, laws. Now, as Priti was mentioning ethics, I think ethics is the one important thing. We all, the chartered accountant, the most important pillar of our profession is ethics. Same is the true for the, the corporates, where unless you are ethical, see, you might be compliant of the law, but that is only tick box approach, I can say. But if you are, if your culture is ethical culture, that is very, very important. So this leadership and ethical tone has to be set at the most highest level, of the organization.
Sir, you have set an example to have such a great governance over there. So that is how you are driving from the front. Vikramji is here, say it is a NSE clearing corporation, NCL we say, is the largest clearing corporation across the world. So Vikramji, how you are able to manage this governance part and also taking these new innovations?
One thing, when we come from the ecosystem of the stock exchanges and the clearing corporations, NSE clearing, governance does not remain an obligation for us. Compliance with the regulatory norms does not remain as just as an obligation for us, because we are also seen as the public trust entity, right? So technically, whatever we do, whatever we define, while we have our own responsibilities of following the requirements and the regulations specified by the regulators like SEBI and others, but we also establish norms and we also define practices for the market to actually create that trust in the entire capital market ecosystem. So our responsibility on governance will technically go a little higher than maybe other corporates, because we also need to set an example. If I try to bucket this into three specific areas, one is, it cannot be governance just by compliance. It cannot be that regime. It has to be governance by inspection, and inspection not external, but you questioning yourself as an organization on a continuous basis. Let me bring the example of NSE clearing. While most of the organizations will have a board, a management committee, you'll have your independent subcommittees, etc. The kind of independence that we give each committee is phenomenal. Very well-defined terms of references. The committees are all measured against those. Board only comes in from the governance and the umbrella aspect. So everybody has a very clear responsibility defined. Second is about risk. Risk management governance is something that we breathe as an organization. And the last, I think, would be stakeholder trust. Let it be our brokers, let it be our investors, let it be our regulators. I think our governance, to make sure that we maintain that independence, that transparency, that the trust stays in the ecosystem, and above all, the fact that most of the people don't know there's a clearing corporation exists behind the entire settlement. I think we are doing a great job of the governance on stakeholder management.
Inumala sir, how have you actually navigate the governance complexities of this dual mandate? And what measures have been the most effective in elevating transparency and accountability within the organization?
So the public sector banks, they are subject to dual mandate. So how they navigate this dual mandate and the governance, related governance complexities is to strictly operate under the control that is shared between the government and the Reserve Bank of India. On the top of it, public sector banks are also listed, so they comply with the LODR guidelines or requirements. Regarding the second part of the question, the measures that were very effective in promoting the transparency and accountability as well as governance standards in the banks, The first thing that comes to my mind is induction of independent directors who are well experienced and having good knowledge on the financials. They have good knowledge on the law, the risk management. So what happened is, with the induction of such independent directors, the external influence has come down to a larger extent, and the functioning of the boards have improved. The second thing that comes to my mind is these public sector banks, they have started giving equal importance to both profitability, that is the commercial viability, as well as the government social objectives. The ease mechanism that has been implemented has encouraged all the public sector banks to improve the processes, to improve the efficiency, enhance the customer experience. The IBC mechanism also, it has brought in a lot of changes in the credit culture. The Basel III disclosure requirements, they have encouraged the banks to have uniform disclosures in terms of the capital adequacy, the liquidity coverage. On the top of it, when the public sector banks got listed, the listing obligations made them to improve the governance standards, their accountability, and the disclosures. So, and the whistleblower mechanism also has brought in a lot of transparency and more accountability and improvement in the government standards of public sector banks. In nutshell, these are the measures that have been very effective in improving the accountability as well as the governance standards in public sector banks.
So thanks. That is a great measures which have been adopted. That is really great to learn. I really, thank from the bottom of my heart for all of you being here.